This is really a valuation call, and look, the market overall is pretty frothy valuations, but Apple, even relative to the Mag 7 peer group, is now extremely stretched with a PEG ratio of around 3, where the rest of the Mag 7 trades with a PEG ratio of around 2. So there's this perceived safety in Apple. Wonderful franchise, very dedicated customers. But there is no safety when you're paying 33 times earnings for a company that's growing organically in the very low single digits, and even with buybacks, earnings are still growing at sort of half the rate of the rest of the Mag 7.
When I look at it, it's the idea of a sell rating, and that means a fractured free cash flow. Are you suggesting this will filter down in the mix of cash from operations, CapEx, and then finally free cash flow, where they're going to miss the mark?
No. I want to be clear. We're not saying Apple is a broken company. I want to come back to some very real risks that we should talk about. But Apple's not a broken company. It's a broken valuation, and there are, as I said, some significant concerns that ought to be reflected in a lower multiple, or at least a more sober multiple than what you've got right now. There was this narrative over the past couple of months, particularly into the last couple of weeks of last year in 24, where everyone was talking about the fact that Apple was, quote unquote, melting up in the face of no news. In fact, there was actually quite a bit of news, and it was bad, or at least sobering and concerning news. Obviously, the risk of retaliatory tariffs when we got a Trump administration, but more saliently, over the last couple of months, you've had the judge in the Google antitrust case say that the payments that Google makes to Apple for search, which, remember, that's 25% of Apple's operating income, are patently illegal. Now, we don't know how those will change, but there's obviously a risk that they do. That ought to be reflected in the multiple. And then there's real deterioration in China, and some obvious concerns that with China, the Chinese government is obviously not going to allow Western large language models to answer questions in China. So you're going to have Chinese partners. That's got to be contemplated with margins and all that sort of thing. So again, nothing says that Apple is broken. Although one more thing, there are real concerns about whether AI is going to drive the kind of upgrade cycle that seems to be discounted in the stock.
Right.
We're pretty skeptical. But Apple's not broken. It's the valuation that's broken.